Get ready for the ultimate tech takeover. First up, Microsoft is making a massive play for Azure AI supremacy, snagging a huge deal with Nebius that's shaking up the industry. Then, OpenAI and Microsoft are forging a new path, hinting at a massive restructuring that could change the AI game forever. We're also diving deep into the heated debate around the EU's 2035 combustion engine ban, with German automakers and unions calling for a rethink. And finally, a stark warning from both Google and Microsoft execs: adapt to AI or risk being left behind. Stick around, you don't want to miss this. Hit that like, subscribe, and ring the bell. Microsoft's AI ambition, a margin sacrifice for cloud dominance. Microsoft is going all in on AI, and this week's massive $17.4 billion deal with Nebius for GPU capacity is proof. Facing soaring demand for Azure AI and delays in their own silicon production, Microsoft is leasing billions in GPUs from NVIDIA to bridge the gap. This strategic move, detailed in a 5-year pact with Nebius, aims to secure immediate capacity, mitigate supply chain risks, and diversify beyond existing partners like CoreWeave. The catch: Microsoft is willing to sacrifice short-term profit margins to fuel its rapidly growing AI engine. Azure's growth is nothing short of explosive, with Microsoft Cloud revenue jumping 27% year-over-year to $46.7 billion last quarter. The challenge isn't demand, but supply. While Microsoft develops its own Maya and Cobalt chips and expands data centers, the current AI computing needs have outpaced these internal efforts. To keep pace, Microsoft is essentially renting the necessary GPU power. More GPUs mean more Azure AI usage, which directly translates to sustained growth. However, this reliance on third-party hardware is impacting gross margins, which dipped to 68% in the last quarter as AI infrastructure scaled up. Analysts and investors are closely watching how Microsoft balances this margin pressure with its aggressive expansion, especially as capital expenditures surge to support chip development and data center build-outs. Despite these short-term trade-offs, Microsoft's immense cash flow and strong market position provide a robust cushion. Wall Street remains overwhelmingly bullish, with a consensus, strong buy rating and price targets suggesting significant upside. The market is betting on Azure's continued acceleration, the insatiable demand for AI, and Microsoft's ability to navigate the capex to margins dynamic. The partnership with Nebius underscores the unprecedented demand for Microsoft's AI offerings and the long-term growth potential that is expected to outweigh the near-term margin dilution. Don't go anywhere, because the AI revolution is far from over. We're about to reveal a groundbreaking shift at OpenAI that could redefine the future of artificial intelligence. OpenAI's radical restructure, a new era with Microsoft. In a move that could reshape the artificial intelligence landscape, OpenAI and Microsoft have inked a non-binding deal that paves the way for OpenAI to transition into a for-profit entity. While the precise details are still under wraps as a definitive agreement is hammered out, this signals a significant step forward in OpenAI's ongoing discussions with Microsoft. The primary driver behind this restructuring appears to be OpenAI's ambition to raise capital and adopt a more conventional governance structure, potentially setting the stage for a future public offering to fuel its ambitious AI development. This strategic realignment comes as OpenAI seeks to broaden its partnerships with additional cloud providers, aiming to boost sales and secure the vast computing power necessary to support its escalating revenue growth. For Microsoft, this deal ensures continued access to OpenAI's cutting-edge technology, even as concerns about AI models achieving human-level intelligence loom. However, this evolving relationship also prompts Microsoft to accelerate the development of its own AI models, seeking to lessen its dependence on external partners. This development is crucial for companies looking to stay ahead of industry trends and integrate advanced AI capabilities into their operations. But the AI story doesn't end there. We're shifting gears to talk about a critical deadline that could determine the future of driving as we know it. EU's 2035 combustion engine ban. Automakers and unions sound the alarm. Germany's automotive industry is pushing back against the European Union's proposed ban on new combustion engine vehicles starting in 2035. The VDA, Germany's Automotive Industry Association, and the IG Metall Metalworkers Union have jointly urged the EU to reconsider, calling for greater flexibility in CO2 regulations. They argue that the pace of electric vehicle production and market adoption has fallen short of initial expectations, citing challenges within the battery supply chain and the slow rollout of charging infrastructure. Despite these concerns, both the VDA and IG Metall affirm that the transition to electromobility is fundamentally the right path for the German auto industry to maintain its global competitiveness. Their plea to the EU highlights a growing tension between ambitious climate goals and the practical realities of industrial transformation. As the automotive sector grapples with this complex transition, businesses worldwide are increasingly relying on ESG solutions to navigate sustainability regulations and industry shifts effectively. From the road ahead to the future of work itself, a critical message is echoing from the titans of tech. You won't want to miss this urgent call to action. AI imperative. Google and Microsoft executives issue stark warning to employees. In a unified message that underscores the transformative power of artificial intelligence, executives from both Google and Microsoft are delivering a consistent warning to their workforces. Embrace and learn to utilize AI tools or face obsolescence. This clear directive highlights the rapidly evolving demands of the modern workplace, where proficiency in AI is quickly becoming a non-negotiable skill. The message from these tech giants signals a fundamental shift in how work will be performed across industries. Employees are being urged to proactively engage with AI technologies to enhance productivity, drive innovation, and remain relevant in an increasingly AI-integrated professional landscape. The implication is clear. Those who adapt and integrate AI into their workflows will thrive, while those who resist may find themselves struggling to keep pace. That's a wrap on today's must-know tech updates. But before you go, let's quickly recap the biggest headlines and make sure you're subscribed. And that's a wrap on today's essential tech updates. We saw Microsoft making huge moves for Azure AI supremacy with a massive Nebius deal, OpenAI and Microsoft forging a new path with a potential restructuring, German automakers urging the EU to rethink the 2035 combustion engine ban, and a stark warning from Google and Microsoft execs about adapting to AI. If you found this info valuable, smash that like button, subscribe to Microsoft Sphere for more, ring that notification bell so you never miss an update, drop a comment below with your thoughts, and follow us on all our social channels. See you next time.